Well, I do think for the moment it's passive, but he's certainly making a statement, and it's a statement about censorship. He doesn't agree with censorship for as smooth functioning democracy as he has tweeted, I believe. And so I think he's sending a strong signal to the new CEO. And I also know there's some controversy about why Jack left, having to do with this new CEO. So a few messages there.
Have you talked to Elon at all about it?
No, I have not.
Okay. And would you be buying either more Tesla or Twitter on the news? And let's throw on Tesla also having this record first quarter. Is this a catalyst to buy more of these shares in your view?
On Tesla, we post our trades at the end of every day, so many will know that it is the largest position in our flagship portfolio and in most of the portfolios where we hold it. But we have been selling recently because of how well it has done relative to the rest of the stocks in our portfolio. So it has levitated relative, and so it's been a good source of cash. We've taken profits and redeployed them into other stocks that we thought were being unfairly penalized here. And I think one of the reasons for that is Tesla's in the indexes, the broad-based indices, and most of our other stocks are not. And that's a big problem out there in terms of the way capital is being allocated these days in the public equity markets.
Cathie, how much would Tesla have to fall for you to start buying again?
Well, even now we're going to put out another model on GitHub I'm going to say within a week. Our last one is from about a year ago, and you'll see from that model that our price expectation at that time was $3,000. So there's still a lot of running room ahead for Tesla. But relative to the other names in our portfolio, even though that's a triple or nearly a triple, other names in our portfolio we believe will deliver much more than that over the next 5 years because they have been hit so hard. They're not in indexes. And so when there are risk-off periods, traditional investors really diversify and sell our stocks as they move closer to their benchmarks, the benchmarks against which they are measured. So it's a great buying opportunity for us. I will say I can't believe how long that buying opportunity lasted from February of a year ago to a few weeks ago. But we think the concentration of our portfolios towards our highest conviction names will pay off. As for Twitter, well, it's having a beautiful day today. And I think there are some investors relieved that someone is willing to speak up and say, hey, you're going to ruin this platform if you continue to censor it in somewhat random ways. So I think that's good. I will say this could be setting up for another leadership change at Twitter. You never know. And so that will bring with it perhaps some uncertainty and dislocation. So especially as it relates to advertisers. So we shall see.
So Cathie, uncertainty potentially at Twitter, a potential leadership change. Who are the names that you would like to see lead Twitter? Who could do a great job in your opinion?
Oh, I am not going to speculate on that. And to be honest, we haven't thought about it that carefully. There are names flying around, but I wouldn't want to throw out anything there unless we felt very strongly. So we will wait to see whose names are put forth. But whoever is put forth, and I'm not jumping to this conclusion automatically. I'm saying it's one of many possibilities. It'll either be Agarwal changing the policy of the company to, really open source the censorship or call people out on censorship, or it will be a management change. I don't know what's going to happen at all.
You use the platform a lot, Cathie. You own the platform. What are the specific changes that you would like to see, perhaps Elon Musk, if he would be vocal about it, push for at Twitter?
Well, I think he's already pushing for it. He's been pretty vocal, talking about censorship not being good for the platform, which is, really the world's platform, sort of engagement platform. And yes, we do use it liberally. We have not been banished yet, but you never know. You never know.
Well, I'm curious too, in terms of Elon Musk, Cathie, looking at Twitter, making this investment, does it make you want to look at some of the other social opinion platforms that are out there and social media platforms, whether it's Meta, which has certainly been beaten up big time? Does it make you want to kind of look at them as for either further investments or initial investments?
Not really. I think what's happening, the ground is shifting underneath social media. I don't think anyone understood until Facebook reported or gave guidance for the first quarter how provocatively disruptive TikTok had become. I mean, I know I've seen my children and their generation spend a lot more time on TikTok and wondered, how would this impact Facebook? But I also know that there's a huge advertising shift from linear TV to social. So you had those two opposing forces. Well, it appears that TikTok is being much more disruptive than we thought. And not just Facebook, but Netflix has talked about it as well. This is competition for the consumer's time. And so I think, again, the ground is shifting. And if you think about it, a Facebook, when you think about Instagram and Facebook itself, it's all about me. It's, I am central. If you think about TikTok, it's about how can I entertain you? It's a completely different DNA. So I'm not so sure that Reels is going to make it the way that Stories did. Stories was about me. Facebook got that. TikTok is a completely different animal here.
Hey, Cathie, got to ask you about Chinese stocks. You and I have certainly had conversations, and you've made investments in, you've gotten out, and I just want to know where you are in Chinese stocks right now, because we've seen quite a bounce back in the last couple of days, still down a lot if I look at something like the NASDAQ Golden Dragon. Would you be committing new money? Do you have faith in Chinese authorities actually making Chinese company much more transparent for U.S. investors, especially when it comes to financially sensitive information?
Well, I think that the government is showing that at the margin, it's going to make moves, but they're going to be marginal moves. In this case, I think there are 3 years to comply with our audit requirements. So they're talking that they're talking, and so we'll see what happens. Common prosperity to us means that high profit margins are not a good thing. And so we have steered away from anything with a high profit margin. And we have focused on those companies, and we've in our flagship strategy, we're out completely. We've shifted towards something like C Limited in Singapore. But in more specialized strategies, we're looking for very low margin companies that are consistent with common prosperity, really distributing goods and services into lower tier cities, for example, or providing transportation. So Xpeng, NEO, we have bought their very low margin. It's all about next gen transportation in a world where, human driven cars are still, relative to the eligible drivers, still very low percentage. So we're interested there. JD Logistics in the logistics area, using drones, lots of innovation. They're doing a lot, again, pushing into the lower tier cities. So we're a bit gun shy. We don't think that the Chinese government is thinking very much about treating capital well, but we know there are huge opportunities consistent with common prosperity. And so we will have an allocation, but until until things change dramatically, meaning more of friendly to capital, we'll probably keep that exposure pretty low.
Hey, Cathie, one thing, I mean, you and your team are very good about research, right? And you open it up to the world and you want to have these conversations. I am curious, when we look at the world, specifically what's going on in Ukraine and Russia, China's relationship specifically with, it seems like, wanting to continue some kind of relationship with Russia. How is that problematic, do you think, for investors going forward and ultimately Chinese companies? And is there kind of a rethink on what our global markets ultimately will be like longer term? You are a longer term think individual.
Yes, yes. Well, one thing I do know about China is it's a survivor, and it really does want to be, it really wants to be in the lead in terms of innovation. So we, given our sole focus on disruptive innovation, are not going to dismiss China. But these geopolitical strains are not going to be good. Again, it's capital unfriendly. We do know that innovation solves problems, and starting with COVID, we had a lot of problems. Now with the the Russian invasion of Ukraine, we have a lot more problems. And so we think innovation generally is going to help solve those problems. And so we're happy that the market is now turning its sights back to innovation being a good thing and non-index stocks being an area of great opportunity.
Well, we absolutely not. Tesla, if you're analyzing cars, not by brand, although its brand certainly has done wonders in the last few years, but if you look at range and power, the combination of those, most other auto manufacturers, unless they want to lose money on the cars, most are not going to be able to keep up with or to reach Tesla's combination. So that's very important from a performance point of view and a range point of view. Branding is something different. These other auto manufacturers have brands and a lot of brand loyalty. But I think as consumers start to shift from gas-powered to electric and look at the specs of the different cars, they might still be persuaded by brand only, but they won't have as good an electric vehicle as Tesla will provide. And actually, we've been studying the CapEx schedules for traditional automakers versus Tesla. Tesla is now within the next year or so is going to spend more on electric vehicles, if it is not already, than either one of those companies. So here were the behemoths where, 5 years ago, when most people were saying, Tesla doesn't even have a shot to exist. It's going bankrupt. Now it is spewing out cash and spending as aggressively as it can to roll out new plans. And we think they'll announce another one before the end of the year.
And Cathie, I got to ask you about crypto. ARKW holds GBTC and Coin. So you sold a little Coin. I want to get your take on why you sold Coin and what your feelings about that stock is. And also GBTC. Obviously, this is a way to get exposure to Bitcoin, but it's been in a severe discount. Why not use, say, BitO or even MicroStrategy, which is a proxy for Bitcoin?
Okay, so Coinbase, why did we sell some? On the day that the insider trading was announced, that's not why we sold it. Actually, it was Coinbase who surfaced or exposed what was going on there for the SEC. But the SEC did weigh in and say, we think that at least 9 securities, I think it was 9 of the crypto assets on Coinbase's platform are securities. So there was just a little bit more uncertainty. Okay, how many of these will they have to delist if they decide not to register with the SEC, or if they register with the SEC? How will that change their business model? So you saw that we sold very little, but we did it, we were in a day where the markets were very volatile and Shopify was down 15%. a little bit of a thesis risk increase in coin, so we swapped some. It was maybe 20 basis points, not a lot. In terms of GBTC, well, we started in 2015 when Bitcoin was at $250. So that gives you a sense of how low a cost base we have. And we've continued to hold it. We wouldn't, I don't think we could use BITO and MicroStrategy. We want the underlying Bitcoin.
Less liquid assets, it's been a tough time this year for that. And so I wanted to know anything you could tell us about the timing of that and what this fund is, what the purpose of it is.
Well, we're still in registration, so you know probably better than most. This is a 40 Act fund, so we really cannot say much. And really, my compliance department has said, don't say anything until we're effective. And we're thinking that will be fairly soon. But again, this is in the SEC's hands. The questions we've gotten seem to be de rigueur, so stay tuned. I'd be happy to come back on and talk all about it when we're effective.
Cathie, as you know, Eric went to Twitter. He asked what people wanted to hear, and I loved this question. In your view, what is the best case and worst case scenario for ARK-K returns over the next 5 years?
Well, in terms of returns, I have to be very careful in terms of, we can't promise anything. But if you're talking about the backdrop, if inflation were truly embedded in the system, 70s style, that would not, as the markets were adjusting or would be adjusting for that, that would not be a good time, because interest rates probably would go up a lot. In fact, one of the really reassuring developments recently has been the drop in long-term interest rates. The 10-year Treasury yield back to closing in on 275. It has not been able to maintain anything above 3% for very long at all. So the bond market is basically saying, no, this is a very good time for innovation. However, if it reversed and went the other way, that would be bad. If our outlook for deflation is correct, cyclical deflation and secular deflation, deflation associated with technologically enabled innovations. That's a good deflation. That's not a bad deflation.